I'm Matt Bouchard with REIT.com, and I'm here in New York City for REITWeek 2012, NAREIT's Investor Forum. Joining me is Peter Mitchell, CEO of the Asian Public Real Estate Association. So Peter, investing in China has been a hot topic in nearly every industry for a while now. What are the prospects for cross-border investment in Chinese commercial real estate at the moment?
I think the prospects are much more exciting and real, I think, looking at investment coming out of China rather than investing in China. I think the Chinese government has been quite concerned to hose down the scale of investment to avoid too much of a bubble, and everyone's talking about a hard landing or a soft landing, but certainly there's a lot of pressure, I think, and a lot of keenness on the part of the Chinese government to encourage Chinese investors to actually look for opportunities offshore and deploy capital offshore. And we're seeing signs of that happening in the region already. There are a number of so-called QDI licensed companies in China that are actually licensed to deploy capital offshore. On the other hand, 2 weeks ago we ran, I think, what's a bit of a first in Asia, which was a controlled small gathering of Chinese second and third tier city developers who we took to Japan to meet with a section of major Japanese investors, and there's a lot of interest amongst Japanese in investing in China.
And with your position as the head of APREA, what do you see as the most significant development in the Asian public real estate market in the first half of this year? Probably
not one development. I would say I think a major observation is external shocks and dysfunction in Europe permitting is actually the buoyancy of the market and the amount of capital that's looking to be raised through IPOs. Now there have been some deferred IPOs, but there is quite a lot in the pipeline, and sooner or later these offerings will come on. So we've seen in recent times two hospitality IPOs in Singapore deferred. But we're seeing a lot of action in Japan. The first REIT, I think, since 2007 was listed a couple of months ago by Kennedix, a residential REIT. Tokyo Land, I think their day one is imminent, and I'm aware of a number of other Japanese IPOs, and they're also circling Singapore as a potential location for dual listings. So I'd say overall that buoyancy reflected in the amount of interest and in IPOs and IPOs that have actually taken place. And I think the fact that the first J-REIT since 2007, I think, to be listed is quite a landmark for this year.
And now, spinning it forward, what do you think is going to be the key storyline to keep an eye on for the second half of this year? Well,
we're seeing new REIT markets still emerge. Thailand now has what I would suggest is a true REIT law compared to the sort of grafted real estate mutual fund law they have in the past, which created about 13 fairly illiquid vehicles that couldn't borrow. We put a proposal to the Thai regulators about 3 years ago on the back of a new trust law that they had introduced to introduce a sort of a Singapore-style REIT regime in Thailand. So that's now in operation. The Philippines passed a REIT Act 2 years ago, but it's languishing because of some issues over a couple of policy issues concerning implementing regulations, but that will happen at some time. So we'll see we're seeing one new REIT market already, another one on the way, and of course, the two big elephants in the room, India and China. Maybe not in the next 6 months, but at some point they will come.
Well, Peter, thank you for your insight into the Asian market.
Pleasure, thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.